Welcome to our deep dive into the rapidly evolving world of cybercrime and its staggering impact on global finance. With the increasing reliance on digital technology in the financial sector, cyber threats have grown into a formidable adversary that costs billions of dollars each year and threatens the very fabric of our financial systems. In this video, we'll embark on an insightful journey that covers the vast terrain of this critical issue. We'll examine the alarming financial impact of cybercrime, explore the countermeasures that financial institutions are deploying, and discuss some high-profile cases that shook the world. We'll also delve into the role of policy and regulation in shaping the future of cybersecurity in finance. Whether you're a student, a professional in the finance or tech industries, or simply someone who uses digital financial services, this video has something for you. The information we will share goes beyond just numbers and facts. It's about understanding the underlying dynamics of our increasingly digital financial ecosystem and how we can navigate it safely. We regularly share content on finance, technology, business, and much more. Hit the notification bell to stay updated on our latest content. And don't forget to like and share this video if you find it informative. Ready to navigate the complex web of cybercrime in global finance? Let's get started. Over the past few decades, the world has borne witness to a technological revolution that has fundamentally altered every facet of human life. The internet and the digital technologies it has engendered have changed the way we communicate, entertain ourselves, educate our children, and conduct our businesses. Among the many industries that have been impacted by this technological transformation, one of the most critical has been the financial sector. The financial sector's journey towards digitization has been nothing short of remarkable. Traditional brick-and-mortar banking systems have been largely replaced by online banking, ATMs, mobile banking apps, and other digital platforms that have redefined the customer experience. Transactions that once required customers to visit physical branches of their banks during business hours can now be carried out 24/7 from the comfort of their homes or offices. Stock trades, insurance applications, money transfers, bill payments, and even applications for credit are now processed in milliseconds. In the same vein, the insurance industry, investment services, and other financial services have also transformed their modus operandi. High-speed internet and secure online platforms have expanded their reach, enabling them to cater to a global clientele. Today, you can buy insurance, invest in stocks, or apply for a loan from a provider located halfway around the globe. However, this transformative journey has had its share of pitfalls. The rise of the digital realm, while being a catalyst for growth and prosperity, has also opened up new avenues for criminal activities. It has given birth to a darker world where fraudsters and criminals can exploit vulnerabilities in digital systems to perpetrate financial crimes on an unprecedented scale. This new age threat, known as cybercrime, has evolved into a formidable challenge for the global financial sector. The emergence of cybercrime has posed a severe threat to the security and integrity of financial systems worldwide. Cybercriminals, armed with sophisticated tools and techniques, have targeted financial institutions and their customers, causing financial losses that run into billions of dollars every year. As financial systems continue to evolve and become more complex, the scope and scale of these attacks are also increasing, posing significant risks to the stability and resilience of global finance. From ransomware attacks that lock institutions out of their systems to phishing scams that trick individuals into parting with their hard-earned money, cybercrime in the financial sector is multifaceted. The threat is not limited to the theft of money alone. It extends to the theft of sensitive customer data, fraud, business disruption, and the undermining of customer confidence in financial systems. As we delve into the intricacies of this billion-dollar threat to global finance, it becomes apparent that dealing with cybercrime is not a task that can be accomplished by the financial institutions alone. It calls for a concerted effort from various stakeholders, including technology companies, regulatory bodies, governments, and individual users. In the following sections, we will examine the rise of cybercrime in the financial sector, its financial impact, and the steps being taken to mitigate it. We will also look at some of the high-profile cases of cybercrime, underscoring the scale of the problem and the urgency with which it needs to be addressed. Finally, we will discuss the role of policy and future directions in the fight against this significant threat. As we journey through this exploration, one thing becomes increasingly clear. In the age of digital finance, cybersecurity is not just an option, it's a necessity. As we moved into the 21st century, the financial sector embraced digital technologies like never before. However, this digital evolution was mirrored by the evolution of a malevolent threat in the shadows, cybercrime. The burgeoning landscape of digital finance was not merely seen as a revolutionary shift by entrepreneurs and innovators, but also an unexplored territory full of opportunities by cybercriminals. As the number of digital users grew and the volume of financial transactions conducted online increased, cybercriminals found a fertile ground to plant the seeds of malicious activities. Banks, credit card companies, online payment systems, and even individual users began to experience a new wave of financial crime that was deviously digital. At the most basic level, cybercriminals started by exploiting individuals through tactics such as phishing, identity theft, and credit card fraud. Emails and messages purporting to be from legitimate financial institutions or service providers were sent out en masse, fooling unsuspecting victims into revealing sensitive data such as usernames, passwords, and credit card numbers. As rudimentary as these tactics may seem, they have remained stubbornly effective, with many falling prey to them even today. However, cybercrime has not remained static. It has rapidly evolved, matching step for step with advancements in digital finance technology. Cybercriminals now employ sophisticated and advanced tactics to target institutions, often breaching their defenses to siphon off huge sums of money or steal vast amounts of sensitive data. Their methods range from deploying ransomware to lock financial institutions out of their own systems until a ransom is paid, to sophisticated spear phishing attacks that target specific individuals or roles within an organization. The scope and scale of these attacks have been magnified by the increasing integration of financial services. The same interconnectedness that allows a user in New York to instantly send money to a relative in Tokyo also provides an opportunity for cybercriminals. They can exploit vulnerabilities in one system and use it as a launching pad to attack others. Additionally, the advent of cryptocurrencies has given cybercriminals another powerful tool. Transactions carried out using cryptocurrencies such as Bitcoin can be virtually anonymous, making it difficult to track down the culprits. This feature, coupled with the global reach of digital networks, means that a cybercriminal can launch an attack from virtually anywhere in the world, adding an extra layer of complexity to the fight against cybercrime. The evolution of cybercrime has made it clear that no one is immune. From the biggest multinational banks to the smallest local credit unions, from the wealthiest individual investors to the most ordinary checking account holders, everyone who participates in the digital finance ecosystem is a potential target. With each passing day, the threat of cybercrime in finance looms larger, casting a shadow on the otherwise bright future of digital finance. The battle against cybercrime has thus become a top priority for the financial sector. This fight is not only about protecting monetary assets, but also about maintaining the trust of billions of people around the world who depend on these digital systems for their everyday financial needs. It is this trust, after all, that forms the very foundation of any financial system. The rapid escalation of cybercrime in the financial sector has had far-reaching implications, inflicting significant financial losses and damaging the very fabric of trust that binds the global financial system. The sheer magnitude of its financial impact is staggering, running into billions of dollars each year and showing no signs of abating. To grasp the enormity of the problem, one needs to look at the available data and projections. Cybersecurity Ventures, a leading researcher and publisher covering the global cyber economy, has predicted that by 2025, cybercrime could cost the global economy as much as $10.5 trillion annually. This figure represents an almost four-fold increase from the $3 trillion cost of cybercrime in 2015, demonstrating the alarming rate at which this threat is growing. When it comes to the financial sector, the blow dealt by cybercrime is even more pronounced. The Pohman Institute, a premier research center dedicated to privacy, data protection, and information security policy, reported that in 2020, the average cost of a cybercrime incident in the financial industry stood at an astounding $18.37 million. This figure surpasses the average cost for all industries, indicating that the financial sector is a preferred and lucrative target for cybercriminals. However, these numbers merely scratch the surface of the problem. They primarily account for the direct financial losses incurred due to cybercrimes, such as the money stolen during an attack or the immediate costs of remediation and system restoration. There's another side of the story, indirect costs, that often go unnoticed but can be just as detrimental, if not more so. The indirect costs of cybercrime encompass a broader range of repercussions. First and foremost, there's the damage to the institution's reputation. In an industry where trust is paramount, a breach can result in a significant loss of customer confidence, leading to customer churn and a dip in new customer acquisition. Then, there's the legal fallout from the breach. Depending on the jurisdiction, financial institutions may face substantial fines and lawsuits if found to have inadequate cybersecurity measures in place. Moreover, there are the costs related to implementing improved security measures in the aftermath of an attack. This can include everything from system upgrades and the adoption of new security technologies to comprehensive staff training and awareness programs. Additionally, there are hidden costs, such as those related to opportunity loss. Following a cyber attack, the institution's resources may be diverted towards damage control and system remediation, taking away focus from strategic growth initiatives and potentially leading to lost business opportunities. The ripple effects of cybercrime are thus far-reaching, extending beyond the immediate financial losses and seeping into the very structure of financial institutions. The scope of this menace is not confined to any particular region or size of the institution. It is a truly global problem that recognizes no borders. From the bustling financial hubs of New York and London to emerging markets in Africa and Asia, no corner of the global financial landscape is immune to this threat. As such, combating the financial impact of cybercrime requires a holistic view. It's not just about recovering stolen funds or patching up system vulnerabilities. It's about restoring customer confidence, navigating the legal landscape, reinvesting in robust cybersecurity measures, and ultimately fortifying the entire ecosystem against future threats. Cybersecurity measures in finance. In light of the significant threat posed by cybercrime, the financial sector has taken concerted steps to bolster its defenses. Cybersecurity measures have become a top priority, evolving from being an afterthought to a central element in financial institutions' strategic planning. The range of these measures is diverse, encompassing technical solutions, human resources, and policy guidelines. At the heart of these measures is a multi-layered technical defense strategy. Financial institutions are increasingly investing in state-of-the-art security technologies such as encryption, two-factor authentication, firewalls, intrusion detection systems, and artificial intelligence-driven security solutions. By deploying these technologies, they aim to protect their systems and customer data from unauthorized access and detect potential threats in real time. A prime example of technical measures is the widespread adoption of blockchain technology. Originally known for its role in powering cryptocurrencies, blockchain's potential for enhancing security in traditional financial transactions has been recognized. Its decentralized and transparent nature makes it difficult for cybercriminals to alter transaction data, thereby reducing the risk of fraud. AI and machine learning are also playing a crucial role in bolstering cybersecurity. These technologies can analyze vast amounts of data and identify suspicious patterns that might signal an impending cyber attack. By enabling real-time threat detection, these technologies can help financial institutions respond to cyber attacks more promptly and effectively. However, technology alone is not enough. Human resources play an equally important role. The staff within a financial institution can often be the weakest link, susceptible to tactics like phishing. Thus, financial institutions are investing heavily in comprehensive training and awareness programs to educate their employees about the various forms of cyber threats and the best practices to avoid them. Moreover, there is a growing realization that to effectively combat cybercrime, financial institutions need to have a dedicated team of cybersecurity professionals. This has given rise to the creation of roles such as Chief Information Security Officer, whose primary responsibility is to oversee the institution's overall cybersecurity strategy. Policy guidelines form the third pillar of cybersecurity measures. Financial institutions are revisiting their existing policies and creating new ones to incorporate cybersecurity considerations. These policies guide the institution's actions regarding data privacy, system access, customer interaction, and incident response. On a broader level, the financial sector is also acknowledging the need for collective action. Cybercrime is a global threat, and combating it requires cooperation across institutions and countries. Sharing of threat intelligence, best practices, and collaborating on creating a more secure financial ecosystem are becoming key areas of focus. To fully appreciate the impact of cybercrime on global finance, it's worth examining a few high-profile cases that have made headlines in recent years. One such case is the infamous attack on Bangladesh Bank in 2016, where cybercriminals attempted to steal close to $1 billion by exploiting vulnerabilities in the bank's security systems and the SWIFT banking network. Although most transactions were halted, the criminals still managed to make off with $81 million. Another notable incident was the Equifax data breach in 2017, one of the largest and most damaging data breaches in history. Personal information of nearly 148 million people was exposed, shaking consumer confidence in the credit monitoring industry and leading to a massive legal and financial fallout. These high-profile cases underscore the immense potential damage that cybercrime can inflict on the financial sector. They also highlight the critical need for robust cybersecurity measures and the severe consequences that can occur when these measures fall short. As the financial sector grapples with the growing threat of cybercrime, policymakers and regulators have a crucial role to play. The creation of comprehensive cybersecurity regulations, international collaboration, and public-private partnerships are key to fostering a more secure financial environment. Around the world, governments and regulatory bodies are taking steps to implement policies that mandate stronger cybersecurity measures for financial institutions. In the US, regulatory bodies like the Federal Financial Institutions Examination Council and the Office of the Comptroller of the Currency have established cybersecurity assessment tools and guidelines for financial institutions. Similar regulations are being enacted across the globe, reinforcing the importance of cybersecurity in the financial landscape. Looking to the future, cybersecurity is poised to become an even more critical aspect of global finance. As financial technology continues to evolve and the financial ecosystem becomes increasingly interconnected, the potential attack surface for cybercriminals will continue to grow. As such, investments in cybersecurity are expected to rise, with a focus on developing more sophisticated defense mechanisms and attracting skilled cybersecurity professionals. Moreover, the future of cybersecurity in finance will likely see greater emphasis on collaboration, both domestically and internationally. This will involve sharing threat intelligence, collaborating on innovative cybersecurity solutions, and working together to create a regulatory environment that promotes security while enabling innovation. As the relentless march of technology continues, the world of finance finds itself in a state of perpetual evolution. The digitization of financial services has brought with it convenience, efficiency, and a world of new opportunities. However, it has also unveiled a formidable adversary in the form of cybercrime. From petty online theft to sophisticated multi-million-dollar heists, cybercriminals have proven their adaptability and creativity, capitalizing on the vulnerabilities of this digital frontier. The financial ramifications of these cybercrimes are immense, running into billions of dollars annually. But perhaps even more detrimental is the underlying threat to the trust and confidence of consumers in digital financial services. As we have seen, the impact of cybercrime isn't confined to the immediate financial losses. The damage inflicted on the reputation of financial institutions, the potential legal consequences, and the ripple effects on business operations and growth are equally profound. However, the financial sector is far from helpless in the face of this threat. Investment in cutting-edge security technologies, human resources, and comprehensive policy guidelines signify a robust defense strategy against cybercrime. Harnessing the power of AI, blockchain, machine learning, along with educating and preparing the human workforce, are instrumental in fortifying the financial sector against this pervasive threat. High-profile cases of cyberattacks serve as stark reminders of the urgent need for stringent cybersecurity measures, and more importantly, the severe implications of any shortfalls in these defenses. They offer valuable lessons and warning signals for financial institutions across the globe. As we look ahead, it is evident that the role of policy and regulation in guiding the future of cybersecurity in finance is indispensable. Striking a balance between fostering innovation and ensuring security is the need of the hour. Through collaborative efforts, knowledge sharing, and aligning on regulatory norms, the fight against cybercrime can be bolstered. Cybercrime in the financial sector represents an alarming threat, one that has grown in tandem with the digitization of finance itself. Its implications are vast and varied, affecting every stratum of society, from individuals and small businesses to multinational corporations and nations. In essence, cybersecurity is no longer a luxury or an afterthought, it's a necessity. As the financial sector continues to embrace the digital age, it must also wage an unyielding war against cybercrime. The very future of global finance may well depend on the outcome of this conflict. This journey will require resilience, innovation, cooperation, and above all, a commitment to preserving the integrity of our financial systems. That wraps up our in-depth exploration of cybercrime in the global finance sector. From its financial impacts and cybersecurity measures to notable cases and the future of cybersecurity policy, we've covered a lot of ground. But remember, the world of cybercrime is continuously evolving, and staying up to date is key. If you found this content useful and would like to dive deeper into topics around finance, business, cybersecurity, and more, please consider subscribing to our YouTube channel. We regularly post videos that delve into these complex issues in an accessible, engaging way. Join our community of learners and thinkers by clicking the subscribe button. Don't forget to hit the notification bell to stay updated on our latest content. Your engagement helps us create more informative and captivating content tailored to your interests. Remember, in the battle against cybercrime, knowledge is our greatest weapon. So, let's continue to learn, stay vigilant, and navigate the digital landscape safely together. Thanks for watching, and we look forward to seeing you in the next video.